So you're looking to build a financial life in the United States. It's an exciting step, but you've probably heard that it all starts with one thing, a US credit history. The big question is, how in the world do you build something when you're starting from scratch? Well, let's break it down together. Here in the US, so much of your financial life gets boiled down to just one single three-digit number. It's your credit score. And honestly, this number is huge. It can be the deciding factor in getting an apartment, a new phone, a car loan, even a mortgage someday. It's kind of like the invisible key to your entire financial future. But what if you don't have one? That's the reality for so many people who are new to the country. You could have been a financial superstar back home with a perfect track record. But in the US system, it's like you're starting from zero. You're what they call credit invisible. So what does that actually mean for you day to day? Well, it leads to this really frustrating situation. It's a paradox, really. To get credit, like a credit card or a loan, lenders want to see that you have a history of paying back credit responsibly. But how can you build that history if no one will give you credit in the first place? Yeah, it's a classic catch-22. And that's exactly what it means to be credit invisible. The most important thing to understand is that your financial history from your home country almost never carries over. To a US lender, you're a total unknown, and that uncertainty usually gets you one answer. Sorry, application denied. Okay, so to solve this puzzle, we have to understand the game we're playing. So let's pull back the curtain and decode what a US credit score actually is, and more importantly, how it's put together. So what is this magic number? At its core, it's just a number between 300 and 850. And its whole job is to predict one thing, how likely you are to pay back money you borrow. For a lender, a higher score means you're less of a risk. And for you, that means better interest rates and, frankly, way more financial opportunities. So how did they come up with this number? The most common recipe is the FICO score, and this breakdown tells you everything you need to know. Just look at this. Your payment history and the total amounts you owe make up a whopping 65% of your entire score. Let that sink in. This is the big secret. More than anything else, building good credit comes down to two simple habits: paying your bills on time every single time, and not letting your debt get too high. All right, so now that we know what the score is made of, how do we actually build one from the ground up? The good news is there are specific tools designed for this exact challenge. Let's open up the Credit Building Toolkit. First step, and probably the most common starting point, is what's called a secured credit card. This is pretty much the perfect tool for newcomers because it's literally designed for people who have little to no credit history. Here's the deal with how it works. You give the bank a small cash deposit, say a couple $100. That deposit then becomes your credit limit. See? This totally removes the risk for the bank. Then all you have to do is use the card for small things like gas or groceries. And this is the important part. Pay the bill on time every month. Each one of those on-time payments gets reported to the credit bureaus. And boom! Just like that, you are officially building your credit history. Now, when you're shopping for one of these, there are three things you absolutely need to look for. First, and this is non-negotiable, make sure it reports to all three major credit bureaus. Second, do your best to find a card that doesn't have an annual fee. And third, a grace period for payments is always a nice feature to have. Okay, onto a different kind of strategy. If you don't really need a credit card right away, there's another really powerful tool called a credit builder loan. It's a super clever way to prove you're reliable without actually taking on any new debt you have to manage. This is where it gets really smart. Think of it like a loan in reverse. The bank puts a small loan amount into a locked savings account that you can't touch. Then you make small fixed monthly payments to pay off that loan. Every single one of those payments gets reported, building your credit. And here's the best part. Once you've paid it all off, the money is released to you. So you've built credit and you've saved some money. Our third tool is all about leveraging a relationship. If you happen to have a trusted friend or a family member in the US who has a really strong credit history, you might be able to become an authorized user on their account. The process is actually pretty simple. They just call their credit card company and add your name to their account. You don't even have to use the card. What happens is their long history of on-time payments can then get copied over to your credit report, which can give your score a really nice boost. Now, the key here, and I can't stress this enough, is to only do this with someone you absolutely trust to be responsible with their finances. So, which of these tools is the right one for you? Well, it really depends on your goals. A secured card is great because it gives you spending power right away, and it's perfect for practicing those good credit habits. A credit builder loan, on the other hand, is like a forced savings plan that happens to build your credit. It's ideal if you don't need access to a credit line right this minute. But wait, I know what a lot of you are thinking. What if I don't have a social security number? Does that mean I'm just locked out of this whole system? The answer is absolutely not. There's another key that can open that door for you. And here's the great news. An SSN is not the only game in town. A lot of financial institutions will accept what's called an ITIN. That stands for Individual Taxpayer Identification Number. For many people, this is the official path to applying for credit and forging that financial identity. Getting an ITIN is a pretty straightforward process. It really boils down to 3 steps. You fill out a form from the IRS called a W-7, you attach a valid federal tax return, and you provide proof of your foreign status and identity, like your passport. It's a clear, well-established process. And what's really cool is that a growing number of banks, and especially fintech companies, are now designing products specifically for people with ITNs. Companies like Petal, Zolve, and New are fantastic examples. What's really powerful is that they often use other data, like your income and your cash flow, to make a decision, meaning they might be able to approve you even without a traditional credit score. Look, building credit isn't something that happens overnight. It's a marathon, not a sprint. Once you get started with one of these tools, the key is just consistency and smart management. So let's talk about the long-term strategy. Once you're in the game, it all comes down to these 4 golden rules. First, and this is the big one, always pay your bills on time. Second, try to keep your credit utilization below 30%. That just means if you have a $1,000 limit, try not to have a balance of more than $300. Third, don't go on an application spree and open a bunch of new accounts all at once. And finally, keep your oldest accounts open, even if you don't use them much. That long history is incredibly valuable. And it's really important to have realistic expectations. This timeline can help. It can take 3 to 6 months of consistent payments before you even see your first score pop up. But after a year or 2 of those good habits, you can see really big improvements and build a solid foundation. The secret ingredient here is just patience. You know, when you really think about it, a credit history is so much more than just a number. It's really your financial passport here in the United States. It's what unlocks opportunities and helps you build the future you want. The journey starts with that very first step. So the only question left is, where will your new financial passport take you?